All right, coming to you again from California. I've been in California a few days now. Gonna spend a few more days here. Looking at the SPX, we are down almost another 1% today, which makes from the high a few days ago from 45.11 all the way down to 44.22. We may test the 4,400 today if this breaks again. Buyers came in here, buyers came in here, buyers came in here. Buyers are gonna have to come in way stronger if this is gonna not go to 4,400. So it's a bad day all around. I was checking around some of my favorites. Trader TV Live right here. Sharif is long at CCL, which made me look at my CCL shares. I haven't seen my CCL shares in a while. So let's take a look at what's happening. CCL is one of the favorites from COVID because they were so volatile. We didn't know what was going on. They got crushed, and then people started just going on cruises. And so they exploded. I bought them. I believe I bought them at 15.50. I'll have to double check. So we got Carnival shares trading higher. They were upgraded from sell to hold. So I haven't been following CCL. I took them off my list. Sold a covered call on them. Held by institutions, okay. Short interest, a little high. Earnings per share, not good. Let's check out the analysts. Analysts have it at a moderate buy, sell here. Some think it's going to go down to 11.50. Some think it's going to go up to 20. This 25, I think, is a little bit out of the realm of possibility. It's trading at 15, so there is a little bit of upside according to some analysts. But let me take a look at my holding here. Take a look at monitor. Holding my CCL right now is I got 100 shares at 15.14. So they're a little bit out of the money. I got this call right here at 17.50 for January. So this is what I'm gonna take a look at doing. So this is the XPX still. Let's look at CCL. CCL, I want to get out of it. So how do you get out of something you have a call on? Well, this is what you do. You go to the next. It doesn't have to be the next one, but these are way out. So you go to the next options date. You take a look at the calls. These are the calls on these side. This is the puts on this side. You look at the in the money. The in the money is 50 and below. You go a little deeper in the money. You got this 14 here. And what you do is you hit the buy. Buy CCL April 2024 call for 315. Now, what is this going to do? Why am I doing this? Well, let's take a look here. Build a strategy. Let's say I sold January call for 17.50. Boom. No. 17.50. There we go. I sold it for way less than that because it was highly depreciated when I sold it. So let's buy 14. Was it a 14 call? Yeah, 14 call at 224. This is delayed, so there were some pops after this. Estimated debit is 152. This is going to be a little different for me because I think I sold it at 30 and I'm going to buy it at 300. Save strategy. So this is a poor man's covered call again. Let's take a look and see what this does. Max profit, $200. Max loss, 152. So the only thing I lose is the difference between the premium I received and the premium I paid. However, what's good about this is I get to sell the shares and limit my exposure. Because check this out. Let's say I bought at stock, buy 100 at whatever it is, save strategy. My max profit, this doesn't change. It's still the same percentage. because of that call out there. But look at my max loss, 1430. So there's a 0% chance of this, but still, it can still go way below 15. It can. It could. The analysts say it could go to 11. So if it goes to 11, the other position, the poor man's covered call, will limit my exposure on this downtrodden stock that I don't trade anymore. So the chances of max profit is the same. A little shorter on the max profit, but way less exposure. So let's go ahead and do that. It's trading a little higher. Let's say people start to take some profits. I'll put it in at 300. Let's see. Actually, let me put it in at 310 because of the premium I already received. Confirm and send. And as soon as this triggers, I can sell my CCL shares for and get about 1,500 back. Now, on that same vein, let's look at my Cliff shares. My Cliff shares, if you remember, I bought it at 14, sold a covered call at 14.50 because there was less chance that it was going to get triggered. And guess what? It didn't get called away. So I still got the 14.50 out there. I could sell it again. But since I am trying to save money, and it's only Tuesday, and the market's on a downtrend, this is up on some news. This is up on earnings from X, I believe. So let's try and sell one deep into the money to make sure that it gets called away, and I make double. Well, actually triple, because I got to keep my premium from last week, and then I get to sell for double premium in the money this week. So this is triple in 2 weeks. So let me sell this in the money. There you go. I got that fill. So I'm saving money all which way. Let's look at my Conagra food brands. I think this one is getting crushed a little bit. I'll bounce back here. I got assigned at 29 last week on the put. So let me go ahead and sell this covered call to make sure I get out of this one. So that's just right now, just with this and the CCL and the CLF, I'm going to put about 7,000 to 8,000 back into my pocket just from these 3 trades. So this is what you call trading on a budget, hoarding some cash, and waiting for that downturn. So that's the trades.